really excited to have Francesca from Fifth Wall, Adam from nZero, and Eric from Atlantic Aviation. Just a quick housekeeping. In the chat, let us know who you are, where you're from, what you're working on. We'd love to see as much activity as possible. In the Q&A, please ask your questions. The audience so far has asked some fantastic questions, and there's been a lot of great momentum, so I'd like to see that keep going. And without further ado, I'm going to leave it to you, Francesca, Adam, and Eric. Thank you, guys.
Thank you, Hugh. So I'm going to do a kind of brief intro on Fifth Wall quickly. So Fifth Wall, we're the largest asset manager focused on real estate technology in the world. We manage about 3.2 billion assets under management across our prop tech and climate tech strategy. Our LPs include 110 of the largest owners, operators, and developers of all different types of buildings globally. So just a couple examples includes CBRE, Lennar, Lineage, BBVA, MetLife Insurance, British Land, Hilton MGM, et cetera, et cetera. Our climate tech fund focuses on finding startups technologies that help make buildings reach net zero. That can be a full range of different things, including, on the front end, how to reduce the embodied carbon of the materials going in, reducing emissions associated with mining, reducing waste in the construction process, to kind of operating side. Can be everything from operating their data centers, with more efficient cooling systems, retrofitting heat pumps into buildings, et cetera, et cetera. And then kind of on the back end as well, thinking about how to reduce things going to landfill, both during demolition as well as from tenants. So that's just to give a kind of slight flavor of some of the areas we look at within the climate tech fund here at Fifth Wall. So the reason we're so focused on decarbonizing the built environment is that it is one of the largest sectors in the economy. It makes up about 40% of global emissions. And in cities, that's actually closer to 60% of emissions coming from buildings. So every company, every person that wants to hit net zero for themselves, they have to figure out how they're going to decarbonize their buildings. But of course, it's really challenging to actually do this. So this is now how we can move on to why we're actually here today. So how do we actually measure these emissions to create achievable plans that fit within the kind of the decarbonization plans, goals, and budgets that everyone has? So just kind of setting the scene here, like why do I even care about this? So some of the things I already mentioned are included in that, but other parts, it's a huge TAM kind of thinking about carbon accounting. It's estimated to be a $32 billion TAM today, and that's both on the software and consulting side of things. This is continuing to grow quite rapidly because of a whole variety of different regulations that are emerging across the world, and also investor and consumer sentiment are starting to push corporates to act as well. So many companies do want this emission data because having information is power. You can't really improve what you can't measure. So having kind of measured, accurate emission data is the only way to avoid greenwashing. It's also the only way to actually know where your emissions are coming from. So the impact of CapEx improvements you're making, like installing heat pumps, and how that's actually reducing your overall emissions. And that data can then be used to further refine your plan and kind of edit it over time, just like you use data to refine your go-to-market strategy or budgeting plans. But it is a crowded space. And so we actually worked quite closely here at Fifth Wall with our corporate LPs to come up sort of with a shopping list of what they needed from a carbon accounting platform. So just kind of run through those quickly. First one was having automated ongoing data gathering. So it kind of removes that upfront barrier of joining a platform. Second is having kind of granular utility data so that there's greater scope 2 tracking. From the investor perspective, we specifically wanted someone that had built out those capabilities themselves in-house versus leveraging someone else's data source. 3, having usage-based data, not spend-based data to increase accuracy. 4, leveraging real-time grid carbon intensity information to determine the emission factors versus using kind of a general aggregate. I always think about this, like if you're in Nevada, if you're using energy at noon, the same energy source that you might be using at midnight, same amount of energy, probably lower emission at noon because there is solar panels, solar power going into the grid. Fifth one, the ability to generate audited reports across a variety of reporting standards. And then finally, is able to report on both scope 1, 2, and 3. So conclusion of this story is that we found nZero. Their product, its features, and of course, Adam made them stand out to us. And so I'm going to move on here to ask Eric a question. So Eric, can you share a little bit more information about Atlantic Aviation's relationship with nZero? How long have you been a customer? What was your selection criteria? And why did you ultimately pick nZero?
Yeah, absolutely. Thanks, Fran. And just as a little bit of background, Atlantic Aviation fits alongside a lot of those areas that Fran touched on earlier. We are an aviation infrastructure provider, so operate terminals and offices and hangars in the aviation space around the country. Specific to nZero, our relationship began actually before I joined Atlantic. We were working with nZero for a specific analysis at our location in Aspen, Colorado, really focused on meeting community interests on detailed accounting and reporting. At the time, we had a different emissions tracking software across the rest of the network, but our team quickly realized in working with Adam and his team that the nZero product could provide some improved data visibility and actionability. And I think one of the things that Fran touched on there in her list of items that were important in a carbon accounting platform resonated. So we saw this opportunity to build a relationship with nZero and really improve our tracking across the network, right? So we saw that difference in performance. We went out to the market and hit on a number of those items that Fran listed, right? So automation, granular data, real-time emissions factors, and ability to track across the entire spectrum were really important. The first automation, right? We needed to reduce our team's time and effort on collection. Best way to do that is turn to a process that can be automated and can run through software. And that was one of the key factors in making a decision. The detailed, granular, actionable data, so we can look at a meter within a market, compare differences and similarities across markets, and enable decision making so that we can figure out where our time is best spent on moving forward with capital-based mitigation plans. It really fit well with what our plan looked like for emissions mitigation. And then I think the one piece that Fran didn't touch on that really resonated with us was the really strong customer support and environmental knowledge that came through with Adam's team. So there were a number of individuals on that team that were working with us on that first project that then carried over into the full selection and helped us to understand how to best approach our data and make decisions. So that environmental knowledge coming in and enabling us to be even smarter about all of that data that we're collecting was a really important piece there.
Awesome. And one thing you mentioned earlier this week when we chatted, Eric, is that you saw a demo of their new retrofitting tool. Can you share some of the features that you particularly liked about that new tool?
Yeah, so absolutely. And this tool is, as Fran mentioned, pretty new to me as well. I saw my first demo earlier this week. So Adam, feel free to jump in as I go. But the tool, I think, will enable us and will provide a site-by-site view of mitigation opportunities, right? So what do the opportunities look like? What are the costs? And how does that all relate to collected site characteristics and energy use data so that we can run simulations and look at what different levers that we can pull will actually do on a site-by-site basis. So we can look across those scenarios, select mitigation pathway combinations to evaluate based on best available information, right? So we have to work with our teams to get that information into the system so that it can help us make actionable decisions. Fran said earlier, information is power in this kind of data space, and we need to incentivize use and input. Data in enables data out. So effectively, the system knows what levers have been and can still be pulled. It runs these things in as part of a building system, not as an individual lever, so that you can see in combination how to make the best series of decisions with a set amount of capital and with an emissions reduction goal. That's my understanding. Adam, anything I looked over there?
No, I think that's really comprehensive. And prior to rolling it out to be a customer-facing tool, that's what the team you were describing, Eric, that's what we were able to provide on the back end to actually do that analysis. We use that tool as for our team versus now being able to expose this and make this available for somebody like Atlantic and 100 plus sites now, across the US. And you hit the nail on the head, right? Which is like, the carbon accounting is a means to an end, right? The end is to actually decarbonize, is to actually implement change and to do something that is conducive with both, Atlantic's operational and business goals, right? And isn't going to cost you millions of dollars, but actually create value for the organization. So we can decarbonize the enterprise and find ways to run the business more efficiently. And it's where you and the Atlantic team have been such great partners, because we've been able to take that data, turn it around, and really in a partnership fashion, as you described, support that and start to roll this out into a larger fleet, and doing this in some place such as air travel, right, in the terminal space. I mean, it's really progressive, and it's an exciting space to be in, and working alongside you and the Atlantic team.
Yeah, and I guess adding to that as well is I mentioned this earlier in the intro about how hard it is to decarbonize buildings. I think what we hear from a lot of different of our corporate LPs is there's so much to do to decarbonize a building. Where do I even start? Let alone if you have a full portfolio like Atlantic Aviation does. And that applies to any type of building that you have. There are lots of different components to kind of actually reduce the carbon emissions there. So it's a very useful tool for anyone who's kind of thinking about that decision tree.
Yeah, to your point, Fran, is like, with Atlantic, right? Like you have hangars and you have office spaces, and like you have different assets within each of these sites, but across 104 sites, they all have hangars, right? Across 104 sites, they all have office spaces. So how can we benchmark and compare and run, basically, be able to create, a digital twin and run, on average about 3,200 simulations to identify what's most efficient for each of these, not just based off of it's a hangar, but it's a hangar in a certain market like Aspen, right? Which is like, so electrification makes a lot of sense because in the market in Aspen, that's a grid where we know it's being decarbonized, it's going green. And so electrification makes sense. Where other grids, they are dirtier. And especially you hit that earlier in this conversation, where the hours you may want to electrify may actually be ramping up your carbon emissions, not decreasing it. So how do we take all of these multiple factors here to come up with a solution that still hits that nail on the head, so that Eric says yes and wants to bring this to his CFO, that it's like, okay, this hits all of our boxes here as a company.
Yeah, exactly right. And taking that even a step further with what Fran mentioned a little bit earlier is, we can then compare the value that comes out of these opportunities to the cost and make a return-driven case to go to the CFO and say, this is a good decision because it's sustainable and it will improve the business's P&L.
Awesome. I was going to kind of change tack slightly here and start talking about some of the regulations that's recently been coming out. So there are three pieces I was going to specifically mention. So first one, Local Law 97 here in New York. I'm in New York. And the summary is that if you're a building with over 25,000 square feet, you have to make sure that you stay below certain emission levels and actually also report on these emission levels. There's a limit set by year, and 2024 will be the first year where this is all applicable. If you don't comply with these levels, the building owners will be fined for each month that they don't comply. Second piece of legislation is the new one that came out in California, SB 253. So it requires all large companies that currently operate or do business in California to disclose their emission data. It includes pretty high penalties for inaccurate Scope 1 and Scope 2 data, and it's also a pretty high bar for what accuracy means on that Scope 1 and 2 data. There's a bit more leniency on the Scope 3 side. It's more of a best efforts basis, just because everyone understands how challenging it is to measure kind of that Scope 3 emission data. And then final one to mention here, the European Corporate Sustainability Reporting Directive, which requires all companies to report their past and present GHG emissions. There's certain criteria for what size of company you have to be to start reporting. But starting in June 2024, it's estimated that about 50,000 companies that operate in Europe will be impacted by this regulation. So kind of with that in mind, Adam, can you share how nZero actually helps companies that want to make sure they're staying compliant with these regulations?
Yeah, the big transition that you're talking about here is right. It used to be, 5 years ago, everything was about frameworks, right? It's about getting out, a basic CDP report or a GRES report or doing something like this. And today it's a compliance issue, whether it's building performance standards like Local Law 97 or it's more enterprise-wide reporting pieces. And so what nZero does is, as focused as we are on the built environment and helping to drive change at that asset level, right? Because that's one of the areas where you can create the most immediate effect and drive both ROI and emission savings. We also are able to, and we do this across the board for our customers, take that step back and be able to do an enterprise-wide emissions landscape view. So the same way that we connect in Atlantic Aviation's case, we are pulling data, that real-time data is coming from their utility meters they already have. We're not installing any hardware. We're connecting to those assets, right? We're connecting to the data streams of operational data they're already producing, and we're automating that ingestion of it for them. So not only do they understand the buildings and those opportunities there, but we can understand the value of their electric tugs versus diesel tugs. We can understand what their different emission sources are on different fuel types that may be purchased for customers and how this is going, providing enterprise-wide. And it all comes back to data quality and data capture, right? And so that's, when you were setting up the intro for us, that's what we began with, was just how can we capture the most granular data in the most automated fashion possible, not just for the built environment, but across the enterprise. And as you see these regulations come in here, they may have their own framework onto how they need to be reported, right? We're still waiting. We'll wait for the regulatory environment of SB 253 in California, for all organizations that have $1 billion plus of revenue that have to report, or with Europe, or we can look at New York. But when you have that ground truth data straight from the source, you can use that for any of the reporting frameworks as they come on here, whether it's those 3 that were described or it's the 50 other building performance laws that now exist just in the US alone. And we help our customers to say, we can let you know where you have local reporting requirements, where you have state requirements, where you have US requirements, we have European requirements, we have Australian requirements, right? I mean, it's a global landscape here, and in navigating that and having a compliance tool that can let you know where your risk is, but also to help drive that decision-based out, like the decision making to reduce that risk by investment into the buildings.
And one other question, kind of following up on that, do you currently operate in a lot of it's globally? Do you currently operate just in the US? Kind of what is your footprint?
We are serving clients with global footprints, and we have offices in both Europe and the US, but we have customers with assets in throughout Asia, Africa, Europe, US, North America, South America. So truly a global footprint on what we are serving today in our client base, and helping them to navigate all of the nuance of both compliance and decarbonization.
Absolutely. And Eric, I know that Atlantic Aviation is increasing their usage of nZero. How much of this is driven by some of these new regulations coming out?
Yeah, I think again, information is power, right? So we need to be accessing that data and that knowledge that comes from nZero, and enabling our teams to stay on top of what they need to stay on top of to be smart in this arena, right? We're getting a lot smarter about scope 1 and scope 2. That is more of our core function today. And I think what we'll need to evolve into is that scope 3 level of detail. And if you look at, there's a question in the Q&A that hits at this. If you look at Atlantic's profile, right, our scope 1 and 2 is less than 5% of our total scope emissions, and the other 95 plus is that scope 3 bucket that will be more complex to track, and we'll have to be a lot more strategic about as these regulations evolve. So staying in touch with the nZero team and ensuring that we know what we have to be doing, when we have to be doing it, will benefit us. So I think starting now is an important step as we look at these regulations that will be rolling out across the coming 3 to 5 years.
Absolutely. And I'm going to ask one final question before opening it up to everyone else. So Adam, you already kind of primed me for this. So how difficult is it to get high quality, accurate data? And can you walk through what you see as some of the biggest challenges there and how nZero is solving it?
Yeah, the biggest challenge is that data is very disparate throughout an organization, right? So every activity, every purchase, everything you do in an organization essentially has an environmental impact, right? It has a carbon impact. So how do you now add this lens and go back to basic principles of saying, when I buy when I buy an electric tug for a site, what are the emissions from the purchase of that on my scope 3, my purchase goods and services? And then how does that affect my operational emissions at a site? And so for us, how we capture that data is we start by saying, where's that data being generated, right? So how can we work with people in purchasing to say, as you're purchasing new equipment, as you're working in this, and Eric, you hit on this early on, right? This requires partnership, right? This is like, we can automate so much of this data collection, but when we first started engagement, we really have to get to know the business. Every business is unique. And we have to get to know, in Eric's case, that every single site has their own site manager, right? And we need to get with them. We need to understand where they have their data, how they're purchasing, and how to get that. Once we establish that, we can build automation and remove that burden, right? Remove that kind of pain in the butt piece of, all right, well, I got to call Bob in Denver and make sure that he's uploaded the data every month. Like, no, Bob's actually let us know where the data's at. We've developed capture methods across this. And now Bob can go back to running his FBO, right? His field-based office operation, right? He can go back to going to do his job, and we can go into the place where we partner with Eric at that corporate level to bring that data in here. And Eric's not spending 40 hours a week trying to chase Bob and all of his peers across the country down to do this. I think, like Eric, you hit on that early on. Like, that was one of the biggest first pain points, specifically with Atlantic's. Like, everybody within his company had some ownership of data. How could we get to those people, automate that data collection, and make it really simple so that they could do their jobs, Eric could do his job, and we could achieve the corporate goals?
Awesome. Well, thank you for that. And I will kind of start reading off some questions here from the group. So first one here has got a lot of likes. So it's around regulation. So with regulations coming through, do startups fear the likes of Salesforce, SAP, and other large companies that already have kind of many enterprises on their customer base provide a good enough tool? So, I mean, I'm happy to kind of kick us off with this. Of course, when I'm mapping out the landscape, I look at who the potential incumbents might be that could disrupt the space. Is absolutely an area that I spend time looking at, is chatting to some of these companies. The thing that I found, at least to date, is a couple of things. One, it's sort of a feature within their broader suite. And so with how complicated calculating emissions are, the level of detail and the accuracy on a lot of this isn't quite there yet, at least. And this was a little while ago when I last looked at them, but that's kind of the start point of how I was thinking about it at the time. And as you say here, is like good enough? Fine. I think as the market matures, as more and more regulations come out, and we can kind of see with the California regulation, the level of accuracy matters. And they're starting to regulate on the level of accuracy as well. And so, garbage in, garbage out, bad data in, bad data out. And so it does matter on like your ability to actually collect accurate data.
Yeah, I think from a user's perspective, there's absolutely value in convenience. I think that is meaningfully offset by the ability to get into some of those detailed factors that we touched on earlier, where you're looking at the market-based and a specific point in time and getting real data so that you can achieve compliance with these regulations as you're going through. And I think the other piece here is similar to what Adam was talking about a moment ago, where the ability to come in and understand the business and be flexible and really fit the piece of software to the business that it's supporting was a differentiator for us as we were evaluating tools that are in the market.
Yeah, and I would say, as an added piece here is, first off, if startup founders and entrepreneurs were scared of big companies, we'd never have any innovation. So we are always out here and obviously aware and respectful of what those large enterprise companies like Salesforce and SAP have built. But obviously we think we do it better, which is why we're here. I wouldn't get out of bed if we didn't. But I think also when you look at the regulatory landscape, right, a big part of our go-to-market approach is we do a lot of work in public sector as well, and to helping to craft this environment, right? Working with whether it's a state like Nevada or it's working now with the GSA. We have a couple other states, that we're getting ready to start onboarding into the platform here. So as that regulatory environment comes here, we are also very cognizant of it. And that's part of actually our DNA as a company is specifically that regulatory environment. And to answer the question bluntly, no, I don't think good enough works when it comes to regulation. And if you've ever dealt with a compliance department, risk avoidance is their number one goal. And so they want to make sure they have the best tool out there. At least that's been our experience to date. And not just with Eric, and thank you for saying that, but obviously with the customers that we've brought onto the platform.
I think we probably have time for one more question, and it looks like there's one that kind of two combined into one. So it's around return to work. So what's the impact of return to work policies? Aren't hybrid work from home models better for decarbonization? And then there's one around if corporate offices scope 3 emissions include commutes, and companies factor in work from home do they factor the commutes into their decarbonization plans? Or are those emissions relatively small compared to other building operations?
I think a few things here. Atlantic, specifically, 90+% of our employees are necessarily at an airport every day. So the work from home to move an aircraft around and put it in a hangar doesn't really align. So in some cases, absolutely, but there are plenty of businesses that don't have that as an option to support decarb. And then I think on the scope 3 tracking side, again, it's going to vary by business. For us, it will be a relatively small piece just because the nature of our business includes putting jet fuel into aircraft. So that drives the majority of our scope 3. But it's something that we absolutely need to consider as we go through the tracking process and try to align with compliance needs.
Yeah, and I would say for us with our customers, it really depends as to whether or not most of our customers on scope 3 are looking at their top 5 categories of scope 3, which seems to be a pretty good standard, 3 to 5 categories. But we do a lot of work from home modeling for people. We have in the past, right, where we'll actually go to a grid level and understand what grid carbon intensity looks like in a market and build a model for that to represent what a day from home looks like versus commuting. And we can take survey data on commute pieces. But I know in the commercial real estate space, working with a number of partners, that this is something that they're continuing to look at. And you can see some large real estate management companies who are starting to take into account transportation, and not just for the sake of understanding emissions of transportation, but also how to be more efficient with parking, with electrification of parking stalls, and how to tie this together here because of all of those downstream effects as well, and upstream effects. And so again, data is power, and that power is what kind of enables the change. There's a lot of dynamics.
And then just one final piece to add to that is that I have seen some corporate decarbonization plans that do include commutes. It's like they would have benefits that encourage people to take public transportation versus driving. And so things like that to try and reduce the overall impact return to work might have on emissions. And then one other piece is that if your office is full, either way, you're probably having the lights on, even if it's just one person. And so if everyone's in the office, it might reduce emissions, it might not. It's difficult to tell. It really depends on kind of each company's specific case.
That was an awesome talk, guys. I think we're at time, so I'm going to wrap it up. But Francesca from Fifth Wall, Adam from nZero, Eric from Atlantic Aviation, thank you so much. That was awesome. And thanks to the audience as well. There's some really great questions. Please keep enjoying the summit. and keep up all the great questions. Thanks, everyone.
Thank you.